Welcome to Static Budgets Part 1. By the end of this ACLET, you should be able to explain the purpose of budgeting and why it's essential for businesses and very useful for households or individuals. Budgeting in general is simply making a financial plan or roadmap for the future. We can make financial plans for personal, household, or organization use. Budgets can be valuable in several ways. The process of thinking ahead about personal or business goals can be useful. Having a roadmap to guide you or the business when making day-to-day decisions is useful. And when the future becomes the past, you have a yardstick to measure how well you or the business followed the plan or roadmap. This information can inform decisions and choices for the future. Every business will go about making a budget in a slightly different way, but some general principles apply. We'll look at a typical process for a manufacturing company. It all starts with a sales budget. The number of units that you'll need to produce depends on how many units you think you'll sell, and the cash that you'll have available to purchase materials and pay for labor and operating expenses will depend, at least in part, on your expected sales. When we know how many units of product we think we'll sell, we plan how many units to produce in a production budget. This gives us the information we need to plan and prepare our materials purchases, our direct labor, and our manufacturing overhead budgets. Our expected sales also inform our expected selling and admin costs and our selling and administrative budget. All of these budget pieces enable us to prepare a budgeted income statement so we can see our expected net income or net loss for the budget period. Planning cash flows in and out is a critical step in the budgeting process, so we'll prepare a cash budget. And finally, we'll be able to prepare a budgeted balance sheet. The specific budget pieces that we've described here are all components of what we call a master or static budget. This concludes the ACLET Static Budgets Part 1.